Lesson number 4, how to use Fibonacci tools. In lesson 4, you will learn how to use and trade Fibonacci retracements and extensions, okay? So let's pull up our Thinkorswim. And real quick, okay, what exactly is a Fibonacci? It's a very popular tool among technical traders that is based on key numbers identified by mathematics, okay? Leonardo Fibonacci, he was a 13th century mathematician, okay? But for what we're going to do, we're going to talk about the Fibonacci retracement, okay? And what it is it's created by taking two extreme points, okay? And so this low might be one extreme, and this high up here might be a second extreme, okay? We'll try to think. I'm seeing which one matches up the best, okay? So right here, we have a high and a low, okay? And these are specific extremes, okay? The key numbers ratios are 23.6, 38.2, 50%, 61.8, and then also 100%, and then sometimes you could always use the 78.6, okay? This is the way I have my Fibonacci retracement set up. So if it's something that you want to kind of pause and copy down and create your Thinkorswim to look identical to these ratios, I would pause the video right now. Okay, so with that, the way I use them is it's to identify support and resistance levels, okay? But before we could identify these, we want to figure out what are the best places to draw a Fibonacci, okay? Retracement. I like to do them, and again, there's so many different ways you could draw them, okay? Different time frames. You could use a 5-12 tick chart all the way to daily, hourly, a monthly, okay? But I like to look for swing highs and swing lows. Okay, so what I'm going to do is I'm going to just kind of go from this high right here, because this is where our last swing high, right? From the highest point. And then we fall, and then we go 100%. We rally, get it up to the 38%. You see price pull back, right? Come back, pull back. Then we go to the 50, all the way up to the 61.8%, and then we start to pull back, right? So with that being said, this is the way I like to trade using them. Let's go down to a smaller time frame, to the 5-minute charts, okay? So right now we have this high to this low. And this is all we see. Okay, let's go over here. So this is all we see. I see that we have a high and a low, and then we start to bounce. Okay? What I look for is I either look for a potential short anywhere up around this level. Okay, the 38 to the 61%, depending on what else matches up. Are there other lines, right? Resistance levels that might match up with this, okay? So I'm not looking only at the lines, but I'm looking to the left of the chart, and I'm looking for prior swing highs, swing lows, resistance levels, okay? Or even support levels, depending which way you're going. But I know if price fails and we make a new low, where will price potentially find buyers, okay? And that's where I have the minus 123.6, okay? Now, up here, I have a minus 123.6. The levels I have are 100, right? 0 to 100, 38, 50, and 61. Okay, usually price will go to 38, stall, pull back, go to 50, stall, pull back, go to 61, stall, and then pull back. Okay, that's the way to think of Fibonacci's. I'm trying to keep this as simple as possible, okay? Now, sometimes price will blow right through and it'll go right to the 50 and pull back. Sometimes it'll go right up to the 60. Different market conditions all work. Okay, one day it might work perfect where it hits 38 to the tick, pulls back, goes to 50, pulls back, 61. Other days it'll blow right through it. All depends on the market conditions, okay? But I know that if we fall from this high to this low, right, we made it and we're bouncing. If we fail, chances are what's going to happen is we're going to come down. And I look for the 120, the minus 23 or the 123. Here's the thing. It doesn't matter which way you draw them. If you start here and go up here, okay, I have the minus 23. It's all exactly the same. Your 50% is always the 50, the 123, or the minus 23 is always the exact same place. Same with your 61 and your 38%, okay? It doesn't matter which way you draw. So then, now I know if price breaks, where am I going to look for a potential support level, okay? So as you could see, price is rallying, right? And then we fail. And look at this. Price comes right down to this 30, the minus 23, or in this case, the 123 extension, okay? This is the extension of this move. So it's extending farther than it normally does, okay? So what happens is price falls. I don't like to personally play the breakdown because a lot of times you can have false breaks. What I like to do is I actually like to play to look for the counter trend, okay, for the bounce. I want to be a buyer down at these levels, okay? And then, so let's redraw this, okay? And now we have a significant low and a significant high, right? So I'm going to redraw these trend lines. And now let's see what price does, right? Price is right here. If we come up here, I'll look to short. If we come down to this level, I'll look to be a potential buyer, right? And look at this. Price goes right to that 38 and pulls back. Again, all I'm looking for are the scalp trades, right? I'm looking for 1, 2, 3 points, do smash and grabs. Just grab my money because I don't know where the market's going to go. Okay, so I like to take the high probability trade, grab my money really quick, and leave, okay? Now, some people might want bigger trades. Hey, that's maybe where you look to short the 50%, okay? And you look for it to roll over and get that bigger move. And guess what? Guess where your stop loss goes? Right above the 61, because if we go through 50 and you enter and we get above the 61%, you probably don't want to be in the trade, okay? Because a lot of times it's called the box, right? A lot of times you could look in this area to short, okay? So, but look at how price came up, right? And it's falling and now goes up to the 50%. Right? See how it almost gets up to 50 and then it pulls back. Okay, so think about this. If you went in up around the 50% from this low to this high, you were able to get a nice potential runner, right? Maybe a swing trade if you want to get a bigger move. And right here, look at this. We literally touched the 50% to the tick, okay? Literally right to the line and pulled back. So you could have made money here. You could have made money up here, but you would have had to enter a little early. But right here, it filled you and then it pulled back. Okay, this is almost a 30-point move, okay, in the E-mini. So now, what's our next level? The 61, right? Look for a touch and then the pullback, okay? Here, so look at what happens, right? we kind of get up close, we blew through, but now look at this, it went above and start to rally, but this is all after hours right here, okay? But with that being said, that's why you want to kind of manage your risk and maybe put your stop loss above. But look at this, it's finally coming back down. Okay, so now what was resistance, I'll actually look for as a potential support, right? Maybe I'll look at this 1941 level to be a buyer, because I also know, going back to what we learned on the other videos, old support becomes new resistance, right? Remember we drew our trend lines of where the support levels were? Well, guess what? We have the same exact trend lines, okay, or resistance levels, right? Now we have the same exact trend lines that we drew, but now it's our Fibonacci. Everything ties in together a lot of times, okay? Now, a lot of you might be saying, well, yeah, you drew from here to here. You knew that. Well, no. I'll draw it from here to here, okay? Look, we came right down here and we paused and then kind of fell more, right? But as we came back up, look at this 50 level. Okay, so the 1950 was where we pretty much closed the market today, okay? Now, not all of them are going to work, but let's activate this. Okay, and let's do it from this low. Let's say this is all we saw from here to here. Look, we came right back down, right? We tagged it and we rallied. Let's look at, and now look at price, right? Price rallied all the way from that low, right? All the way up here. But I want to have used this low, right? So let's activate this and go all the way to the lows. Right here, right? Because now we have a swing high, the highest point, and a swing low. Price rallied right to the 38% and we pulled back. Went to the 50, okay? And now it's kind of just stalled right there. Went exactly to the 61%, the 61.8%, and look at what price has done. Literally to the tick. And all I did was I did Fibonacci from the high to the low. Okay, so I don't want you to think I'm making this up. I'm manipulating the charts. I'm not. The key is, where do you draw your lines? Okay, and that comes with time. Okay, there's also, do you drive from here? Well, do I go to 15-minute, 20-day chart? There's all these different things. But look, this is the highest point, right? I'll draw a Fibonacci from that high to that low. If you rallied, go short, right? Kim made money on the pullback. 50% right here, pull back. 61%, right? Pulled back. So there's a lot of different ways to draw your lines. Maybe you draw from the scene of the crime, okay? Right when the market fell. Maybe you go from a high to low. There are different ways, but these are things that you'll learn. The best thing to do is just kind of just jump on the chart and start drawing trend lines, right? Look at this, from high to low. Let's say this is all we saw right here. We pull back, bounce, right? Off the 38. Right to the 50, we bounce a little bit, right? Right to the 61, and then you get a major bounce. Okay, and that was only from this high to this low. So it depends what type of trader you are, what time frame you're trading. Okay, right here, let's go from this low to this high, because this high right here is what on the bigger picture, the bounce, right? Came right down to the 38, came right down to the 50 and bounced, right down to the 61% and we've bounced. Okay, now let's say, right click, edit, let's add the 23.6 and the 78.6. Now remember, they're just like the 38 and the 61%. They're exactly the same distance. Okay, so you could draw these however you want, up and down and up, okay? But look at this, from this high to this low, okay? Look at the pullback that we had, and then the extension right back up, right? Remember, I said sometimes we'll blow right through a zone, but then on the way back up, we'll actually use it as a support level, right? Or a resistance level. So you never know when something's going to work and when it's not. Remember, a lot of this trading is algorithms, okay? They already know where all the Fibonacci levels are on all different time frames. That's why the computers are probably one of the best traders out there, because they have zero thinking, emotions, right? They just see numbers, they know those numbers, and they short automatically at those numbers, okay? So now let me show you a couple other tricks that you can use with Fibonacci's. Let's go to 1 hour, right? Look at this. Let's go from this high to this low. Right here, okay? So we make a low and a high, and look, we go right to the 50% and we stall, right? Right to the 50 gets choppy. Right to the 61 gets choppy, right? So these are ways to trade on bigger time frames. So with our current market conditions, maybe we want to go from this high to this low, okay? And look to see if things are really lining up, right? So the 38 kind of lines up, the 50 kind of lines up, the 2014 kind of lines up a little bit, right? We haven't reached it yet, but I'm not in love with the way these lines are lining up, because what's happening is we're actually going above or beyond them a little too much, right? So what I'll do is now I'll go from this high to this low. And as you can see, it doesn't respect it whatsoever. So let's go from this high to this low. Okay, and you'll just start to see, wow, okay, hey, some levels respect them more than not. Now, this spike right here, okay, this move was the highest point before we really fell apart. And this is one of the last swing highs that we had before the market collapsed, okay? So if we kind of go out, as you could see, right? This was the highest high, or sorry, the highest swing high until the market collapsed, right? Or sorry, the lowest swing high before the markets really fell out of bed and made this collapse. So what I'm going to do is I'm going to draw it from this high to this low. Okay, and this is kind of giving me a little better picture, right? On the way up, we stop at the 50, we stop exactly at the 61. So what I'm going to do is I'm going to add the 78%. Okay, and I'm going to say, hey, if we rally and we start making new highs, I'm going to be watching this 2037. Okay, probably maybe even this right here. See this little double top, right? Somewhere around this level for a short. Okay, so that's a good way to use Fibonacci levels. Let me show you another couple tricks that I use, okay? And these are going to probably be the most valuable ones that you could trade with. So what I look for is, remember earlier we were talking about in the previous video the W pattern? Okay, so as we come down, we make a W pattern, right? W, which is a double bottom with your high right here, right? So it looks like a W. What I like to do is I like to go from the low to the high, okay? When I see, and I'm able to recognize, and usually you can recognize it when price is over here, right? This is kind of what you see, right? You see a double bottom, okay? You go, oh, look, we have a W pattern. So what I'll do is I'll go from low to high, and I'll watch the 23.6. I don't necessarily want to trade this pattern to the upside, because a lot of times these patterns will fail. But what I'd rather do is trade the targets, because what these are is anybody who's long, okay, the big money, when they're long, they're looking for targets to start to exit the trade, okay? So as we start to rally, right, I actually have my target right here at 23.6, right? Well, I'm going to be looking for a short trade at around 133, okay, 132.50, and look at that, okay? Now, I'm not looking for the big move. Yeah, people go, hey, well, you missed that big move. Yeah, but remember, a lot of times patterns work about 50% of the time, but the targets work about 90% of the time. Now, I'd rather pick up 1, 2, 3 points 90% of the time than pick up 10 points 50% of the time and be wrong the other 50 with a lot of risk, okay? So here you can maybe risk 1 or maybe risk 2 or 3 points to pick up 2 or 3, get a 1-to-1 risk reward, but you're going to win about 85 to 90% of the time, because what happens is these are targets, and this is where all these longs, the algorithms, right, they already know exactly where this number is, the minus 23, so they're selling up there. Okay, so now you have people who are long, they're selling, and then you have people like us, the day traders, where we're looking for those targets to sell too. So watch what happens, right? And now we kind of break out from the upside. Now, phase 2 of this trade, okay, is what I'll do is I'll now take from this low to this high and I'll double it. And what I do is I move it to my 50%, okay? Because I know if I actually draw from here, from this low to this high right here, and give me 1 second. Okay, if I draw this move right here, if I flip this move over, I'll duplicate this, right? That gives me my perfect 100%. Okay? So now I have a couple targets. I have 42.50 and now I have 48.50 on the bigger time frame, right? So let's see. So as I see all this forming, what I'm doing is I'm already putting my orders in to start to go short. Up here, right? I have pending orders into short up at these levels. Well, look at what this high is right here. Wow, amazing, 42, right? So this W pattern is perfect to match up with as a target for this resistance, right? So as price kind of goes up, goes down, right? Now it starts getting choppy. A lot of times when you start to see a lot of chop like this, the pattern doesn't work out as clean. What you want is you want to see a move, maybe 1 or 2 pullbacks, and then go all the way up for it to work, okay? And look at this, okay? So price kind of rallies right to it, right here, right? So if you had your order in at 42, you have a pullback all the way to 41. So sorry, 42.50, you have a pullback down to about 41.25. Okay, now this also was right before the market closed today, so this pattern didn't work out that great. Okay, but with that being said, remember we have our 23% too, right? Our minus 23 target, and look at this, it came within a tick or two and then had a nice pullback of about 3 or 4 points. Okay, but again, this was all after hours after the market closed. Now let's look at this pattern. Okay, so we'll come back to our Fibonacci tool, go from this low to this high. Okay, and this is our very first target, right? The minus 23% came right to it, pulled back. This one extended a little bit beyond and then pulled back. So you could have made money there. Now, do you put your order exactly at that level? No, because that's the target, right? So maybe you want to go 1 or 2 ticks below to hopefully get that fill. Okay? With that being said, now let's look at the phase 2 part of it, right? Remember, we go from the low to the high and then the 50%. Okay, because 50%, if you kind of flip it over, right? As you flip this over, that should be our target. And as you see, we ran right to it. Okay, that 45.25, and we pulled back to 43.75, sorry, 44. Okay, but again, this was right towards the end of the day. Okay, so normally you want to see these patterns intraday, okay, or during the middle of the day. Another pattern, okay, with the Fibonacci's right here. See how you have a triple top? Remember I told you I like the M patterns, okay, and let me see if I could find a decent M pattern. Okay, here you go. So I like these patterns. It's pretty much a double top, right? So you actually go up, pull back, go up, pull back, right? So now let's draw this. Okay, here's your extension, right? Now dipped a little below, but it touched and then it kind of rallied a little bit. But then let's activate and go bring that to 50%. Okay. Now here, price rallies, right? Comes down, but it doesn't come all the way down to this level, right? But now you have a triple, right? And watch what happens, right? You eventually come down to it, right? So this triple pattern worked, or this one, and price came right down to our 0, our 100% move, and then rallied, right? Now you could say, well, here, this is the middle of the M, right? Double top, right? Okay, well, let's draw this guy. Let's bring this guy down. And look at this. Price came right here and bounced, okay? We can even probably come right to this low. We'll activate this and go to 50% on here. And we missed it here, right? So it never got that low until later on during the day, potentially. The next day came down, right? So not every single one's going to work, okay? But a lot of times they do. I'll also look for head and shoulders, right? Head and shoulder patterns. Where is it? Well, here, let's look at this triple top right here, okay? Triple top, again, M is usually the other way, but triple tops will work the same way. Okay, first we go down, okay, just from 100% from this high to this low, the 23 minus 23%, or if you do it the other way, the 123, again, they're exactly the same. Price came down, and guess what? You have your order sitting there. It buys you in your in and out for 1 point. A very quick trade, right? Then that's target 1. Then if you want, go to 50% for target 2, correct? We fall, and look at this. We came, a couple ticks away, right? And then we rallied. So maybe you never got filled here, but here it finally came down and you could have picked up a quick point too, right? But everything for me, the highest probability trade, and always remember this, is the very first touch. Not the second, third, fourth, okay? The less touches, the less reliable it becomes. The very first touch is the one touch that you want, okay? So let's go back and let's do a couple more real quick, okay? Let's look at the 5-minute, 5-day chart, Okay, what we have here, because all this is just training your eyes to see these patterns, right? So we have what's called an inverse head and shoulders. You have the neckline here. It's a head and shoulders just turned upside down, okay? The way it works is you have price here, right? A low. You rally, stall, make a lower low, rally, stall, and then you make a higher low, okay? Rally, and then break out. So what we have is we have an inverse head and shoulders. So here, what we're going to do is we're going to erase all these lines, and now we're going to use our Fibonacci's to get the target, right? So we're going to go up to our neckline, which is right here because these are the 2 points, right, of the neckline. We break out, and look, we came right to, this candle came right to the, what's called the minus 23%, and we actually pulled back from here. You could have picked up a couple points, right? So now let's look at on the bigger picture. Let's activate and let's see where the bigger target would be, right? So if we go from this neckline 50%, right, we take this whole pattern and we flip it so it becomes a perfect head and shoulders to the top. So you would have a head and shoulders up here and upside down head and shoulders inverse down here, right? Well, our target would be 1987.75. We'll call it 1988. Okay? Well, guess what? We have 1984, a swing high, potential resistance, right? We have the scene of the crime from this fall, right? When you just see an entire waterfall, right, but it hasn't gone back up. This is where it kind of fell out of bed, right? The scene of the crime. This is where this entire move all started, right? To go from here down to here, this is where it started. Boom, all the sellers, right? Swing high, right? But a lower high than this, we make new lows, so on and so on. Well, guess what? All this is going to act as resistance on the upside. So yeah, my target's going to be up around this 1988 to complete this pattern, because everybody who's playing this pattern, their target is this 1988 level. So guess what? I want to just, hey, I want a short up there because I know all the big guys are going to be selling. So this is a very profitable day trading strategy, okay, for the EMA and the S&Ps. You can also use this on any other time frame, any stocks, anything like that. Okay, if you want to go to the bigger picture and you find bigger trade levels, you'll just start to see it's almost like this, right? We have, you could say the M pattern here, right? Or you could go, let's draw this, right? Okay, so we have the M pattern, right? And then the breakdown. And once we break down from here, good night, right? So here, I want to show you something real interesting with this, right? So we see our M pattern. And again, M for me is meltdown. Okay, because it's going to melt down, it's going lower. If I see a W pattern, which is the same pattern just flipped upside down, that's called a W pattern. I say winner, okay? I call it the winning pattern because it's going to be going to the long side. But let's draw our Fibonacci, okay? From this low, right, come down. Look at this. As we break this low, we come right to it and bounce. Okay, so look at how perfect that was. But now, here's where it gets interesting. When I flip this entire pattern up here over, look at this. We just kind of blew right through. Okay, we just blew right through all this 100% pattern, but the reason for it is because the market panicked, right? Everybody was running out. People weren't like, okay, I'm gonna wait, I'm gonna walk out, kid, I know there's a fire in the store. Okay, everybody was panicking. This was abnormal level, okay, where prices just fell through. But look at this. So price blew through, but look at the retracement to the tick. Okay, right to the tick, and then we fell off hard. When we rallied, came right back to it, failed. Rally, fail, rally. Okay, old resistance now becomes new support, right? And then we come down, we fail, right? Old resistance, now it's becoming new support. But all this 50% level, this level is just from me taking this entire M pattern and flipping it over. Okay, so I hope you're starting to see how it doesn't matter if you're drawing trend lines, Fibonacci's, everything just seems to tie in at the same levels. Okay, remember the S&P E-mini futures are one of the most technical traded products. Okay, you have algorithms that know all this stuff that I'm showing you. They already know where all these levels are. It's our job to do the homework and figure out where all these levels are. Okay, and these give us the very high probability trade setups that I look for every day in my trading, and this is why I'm able to be so successful at day trading, because I know exactly what to look for. I'm just trying to pass all my knowledge on to you so you could start to do all this. Okay, and you're able to actually start to draw Fibonacci levels. Understand when you start to see these patterns, right? Especially on the smaller time frames. Okay, like the 512 tick chart, stuff like that. You'll be able to go, hey, look, there's a W pattern. I see it. Let me grab a Fibonacci and let me see where price potentially could go. And then I'm going to be looking to be a seller at those levels. Again, I personally don't like to play the pattern because throughout my years of trading, most patterns usually work about 50% of the time, okay? And they're going to fail about the other 50%. Here's the problem. By the time I see this W, price is already up here, right? So I could play this for the long side, but the problem is I'm risking so much, okay? So if they fail half the time, I'm going to have big losses, which psychologically might mess me up, or you might be able to be fine with it. I'd rather play the pattern of the target and look for those high probability trades where I'm making money 90% of the time. Okay, so again, it just comes down to what type of trading style are you, what do you want, but this is what I do. Very simple, very basic, and and it's one of those things that when you start to draw them, you see them over and over and over, and you're just able to kind of go, okay, I have more confidence in my trade setup. So that's it for using Fibonacci's and using the retracement for lesson number 4. And next up will be lesson number 5.